Do you keep accounts? Do you have a proper accounting system in your businesses? How do you keep your accounts to help you build a business to last? On this program, we've empowered you with information on company registration. How do I go about registering this limited liability company you've talked about?
Okay.
So what's the process? Where do I start?
Okay. Let me drop.
Wealth creation. Why create wealth?
You create wealth for several reasons. Firstly,
Trademark. How does registering a trademark open up opportunities for them?
Okay, fine.
Do they also have to register in Nigeria and register in various countries where they are? You talk to us about it.
Okay, fine.
Thank you very much for coming.
Yeah, thank you very much. I'll start by explaining the word trademark.
Okay. Intellectual property. What's an intellectual property? What is that?
Okay.
Those are businesses. Today, we have an accountant who will be talking to us on how to keep your books, keep your accounts. And you'll get to meet my guest, and that is if you do not go anywhere. You're welcome. You're welcome. Thank you for coming to empower us with information.
Thank you for inviting me.
Accounting. Why do we have to keep accounts? What is accounts? Why?
Accounting is a set of financial transactions. Keeping a set of financial transactions purely is bookkeeping. And when you're now going into financial reporting, you're talking about accounting. When you just started a business, you need to keep accounts because the account shows how your business is faring. The account shows a demarcation between you and your business. The account also, when you keep your proper account, it gives you confidence on how things are moving. A lot of people, they do not know the state of their business. They thought they are doing fine. And suddenly they found out that they are not doing fine. Businesses nowadays, shocking, is that small businesses particularly, over 50% die within 5 years. Why? They don't keep records. The big man, the managing director, would think everything is fine, spends every money that comes along his way. But because he's not keeping proper records, then he's overspent what he should spend for his own personal use. In accounting, for your business, you are not the only one that is interested. There are regulatory authorities that are interested. Like, for example, the tax authorities, they are interested. There are various forms of companies, as we've been told. You can form a limited liability company, and you can form partnership, you can form sole trader. When you form limited liability company, that company is different from you. You're only a shareholder like others. But when you form partnership or sole proprietorship, like John, James and Sons, or Ibironke Enterprises, those are sole practitioner traders. Whatever you are doing, there is a business element, there is a personal element. So the inland revenue will be interested in your business element, and you need to keep records. It's not only you that want to see whether you are making profit, you are making progress. They also are interested in seeing that you keep proper records so that at the end of the year, you take good view of your business and pay the appropriate tax. Now the Lagos State government and all governments particularly, they're interested in your paying correct tax. When you just start business, I always advise that make all your transactions, make it go through the bank. The first thing you should do with your certificate of incorporation, you go and open a bank account. When you open a bank account and your transactions are through the banks, you pay in all your sales into the bank, you pay in every income relating to the business into the bank. Then, when you want to spend, you issue the check to whoever you are paying, supplier, even including yourself. I'll get to that later. So your bank statement alone is your record of your business. One that is inflow becomes the revenue or the income, and the outflow becomes the expenses. And so that helps you to even know the state of your position. Another reason why you need to keep records and accounting records is what we call cash flow management. In cash flow, you try to see that there is enough money in the business. Otherwise, your business will fold up earlier. Businesses for some time, a short time, they can make losses and still survive. But no business can survive without cash flow. That's why you see some businesses, everybody hears about them, suddenly you see that they are packed up. You need to have records so that you can manage the cash flow of your business. How money comes in, how you buy goods, how you sell. In your cash flow will show you your debtors, those you have sold to, how they pay. The other books we open, but I'm just talking of records for cash flow.
Yes.
Right? And these things is necessary for you to manage the business. Keeping records is part of managing the business so that you are not running short of cash. Even when you want to seek loan, the banks will ask for your records. From the bank statement, they will have an idea of your transactions. And also, if you keep records, your bank statement alone is not your record. But your record, your accounting record, tallies with what goes through the banks. And so they can form a good assessment of your business and be able to give you credit. If you don't have good records, you will not likely get good credit to finance your business. Most businesses will grow with credit financing. Otherwise, you'll be playing the small boy when you can play the big one with the banks assisting you. That's why you need to keep your records. How do you keep the records?
Yes.
Things are simpler now. Like I told you, you can use your bank statement. The other thing is that there are a lot of software now, accounting software, simple accounting software that you can use to manage your business, to give you a full, sufficient account at the end of the day. Some people make that mistake. They use Excel, Microsoft Excel, to keep their record, to make an account, but it's not right. Because a simple formula on your Excel can give you a different result.
Hold the thought, sir. Don't go anywhere. We'll be right back. You're welcome back. If you're just joining us, today we are empowering you with information on good, proper account keeping. Do you keep your books? Do you keep your account? Do you know how much is coming in? Do you know what your revenue is? Do you know what is going out? So you're welcome. Yes, continue, sir.
There are a lot of accounting software, small business accounting software you can use. In accounting, we believe that accounting is like a human being walking on two legs.
Okay.
Whatever goes in as debit comes out as credit. Whatever you debit, you credit elsewhere. Like if you make a sale on credit, it goes straight to a book, your ledger book. Or if somebody pays, you make a sale, which is credit, somebody pays you, the debit is the inflow of cash. But the software now makes things very easy. Simple way to keep your records. not too much training to know how to use it. Very, very simple. If you just buy those small ones, at least your records are fully kept, including your tax records, and makes everything very fine. There are many that are not too expensive. I don't want to start promoting, but you know there are many in the market that you can use.
And to show you how to.
The training is very simple. They will not even use high technical language. They will tell you when you sell, put it here. The system asks you, did you sell on credit or by cash? You say it's by cash. You put it there, it goes straight to the cash book and shows you that there's an inflow of funds. If you say it's credit, it goes to debit the debtor, which you have created. And then when the debtor pays, you credit the debtors and debit the cash. That money has come in. So at the end of the month, it's better to have monthly reports so that you don't wait for a long time. When things have gone bad, you start trying to find out and race backward. So simple accounting software is enough for you to keep.
How do we separate? Because sometimes you do business and somebody pays you money. How do you separate your personal money that you're spending from your business money?
It's very important. That's a very key point, and that's what is killing a lot of businesses, small businesses, particularly Nigerian businesses. There are situations, madam will go to the office to take money for monthly allowance, and the cashier or the accountant will pay. When you want to start business, give yourself salary. In our farm, I have my own salary. So I work with that salary for myself. Although when we come to taxing it, the inland revenue doesn't take it as salary for me. It takes it as my income at the end of the year. If I make profit, they add that profit to what I've drawn. Because the business, you and the business is still seen as one.
Even if it's a limited liability company?
No. Because it's partnership and soap traders are individual.
Yes.
For example, you pay your tax to your state. But if it's company, limited liability, you pay your tax to federal government, federal inland revenue. Either way, if you are running a company, you also need to give yourself salary. And that is a commensurate salary, not a bogus one, so that you can know whether you are really profitable or not. Once you separate it, then you'll be able to manage your business properly. Mistake people make is that the money you put into your business is your capital. In fact, it is called seed capital. No farmer eats his seed. Every farmer keep from the harvest a good seed for the next planting season. So you should never touch your seed capital, because that is what keeps the business going. In fact, you should add to it by profit rather than taking out of it. But if you do not separate, you not give yourself salary like other employee, then you are likely to overspend what you are supposed to take. You have the seed capital. That is capital you are injected into the business, and you don't touch it. Many people, they see their sales, they see their profit as their own. No, at the end of the year, when you do the accounting, then you'll be in a position to know your profit or your loss, but your capital remains.
What if somebody puts themselves on salary? Somebody says, but I'm on salary in my company. I have what I take as salary. And at the close of the day, that money is not enough for what my needs. So I go in there and I take more money.
You are the one that set the salary. You can revise it.
Okay.
But like I told you, if it is a sole practitioner or partnership, the inland revenue, whether you call it your salary, they take it as your income. They will add it back. So if you take too much and say you have made a loss, By the time they add it back, you see that they tax you on your income. If it's a limited liability company, particularly you are a majority shareholder, 99%.
Yes.
You give 1% to madam or 1% to your son. You can still do and undo in terms of your remuneration. But there's a caveat there. If you run a company in Nigeria, you make losses for 4 years, you never even may query it, and they may challenge you to even close the business because you run business for profit. You don't run business for losses. That is what the Inland Revenue they do. They will come and do tax audit. They see how you are running your expenses. They find that you are running your expenses that is not, a lot of the expenses that you are running is not for the benefit of the company. They will write it back. This is not taxation, but there are implications of you're just spending money, getting involved in things that are not necessary for the business. It will be added back. And you say, okay, sorry, you did not make a loss. You made a profit. This is your tax that you need to pay. So it's not good to just go and dip money, because if the accountant is writing it properly, you find out that maybe they are doing party, you buy Owambe, and then you buy clothes, you float party, you charge it to the company, say sorry. The tax people, they tell you sorry. This company is not doing party, it is you that is doing party. They will up back this party expense. I'm just giving an example.
Yes.
The other things that maybe your children's school fees, for example, you see that I'm the owner of this company. Say pay the school fees. You will say, sorry, you cannot pay your children's school fees from the business. You have to charge it to your account. When you are running a company, you have an account. If you overdraw, they debit your account. Your accountant should debit your account. And
no, so it's my business.
yes.
And I can't pay my child's school fees. I mean, that's the question somebody's going to ask them.
You can't pay your child's school fees. It should be out of your. That's why you determine your salary, determine your allowances. You pay your school fees out of your earnings.
So you can determine your salary to cover the school fees of your children. I mean, I'm asking a question that somebody...
I know. But your salary must be reasonable. It also depends on the volume of your business. The salary of the managing director of Volo Deoku and Sons will be different from the salary of the MD of Zenith. It will be different from the salary of maybe MD of PZ. Depends on the responsibility, the level, your turnover, your business, your kind of business. Is it big? If it's big, it carries higher responsibility.
Hold the thought, sir. Hold the thought. Don't go anywhere. We'll be right back. You're welcome back. If you're just joining us, this is the last segment on accounting. How do you keep your accounts? You're welcome. In this remaining moments, talk us through the process of bookkeeping. From the time we register a company, what should guide us when we are fixing our salaries as managing directors of our different companies? I mean, I'm talking about limited liability company. And in fixing that salary, do we take into cognizance the responsibilities we have as we go along? What should guide us and direct us in fixing our salaries to enable us keep our books properly? Yes.
The first thing that the current trend now is that, one, people have skill, which they want to leverage upon. You can even be a youth copper. You have computer skill. You don't want to work for somebody, but you want to be on your own. You want to set up your own business, maybe small scale. Or you're even working in a bank. Some people that work in a bank and they left and they set up their own business. But all they say, you know that if you are working for somebody else, this is how much from your colleagues and market survey, this is how much they earn. But when you start your business, the usual thing is that you earn lower because you are trying to build the business. Where the business is well established, you can pay yourself 100 million when you have 3 trillion turnover and profit. People start low and they increase. Like I said, you can revise it according to responsibility. In most cases, people look at it, you're employing an accountant, for example, and you're paying the accountant 100,000 a month. We expect that, okay, that business is big enough to have employed that accountant, and maybe you as the MD and marketing manager, you have a salary scale. And then maybe your own will be maybe 1.5 factor, 200% or 2.0 factor. You determine it. Because at the end of the day, it is you that will carry the car. When they make loss or profit, it is you. So set a reasonable allowance for yourself to take care of your minimum domestic requirements. And then, if it's not enough, not because you're extravagant, but because your demands and the demands of the business. I've told you earlier that if you spend outside the purpose of the business, when you submit for tax authority, they will add it back to you, that you should pay tax on it. So set it in a reasonable way. Even when every business, you have business association, even the internet is beautiful now. You can even have an idea of the salary they are paying in comparable industry, companies. You set it for yourself. That's even a guideline. If you cannot meet that, it means your business may not even be doing well. Look for a way to improve it. It's better to make your cake bigger so that you have a lot than the small cake. You want to cut a lot out of it, creates a big problem. I say that set a good record, get your good accounting records, I've told you it's very easy now, get a small software to manage it. You can also use your bank statement. Initially, all your transactions must be through the banks, not part of it cash. You are sending some people in cash, you are not taking the money to the bank, you are using that of. Run away from taking money from your customer and spend it even to buy goods to purchase.
It must go to the bank.
It must go to the bank.
And then you can withdraw from the bank.
You can withdraw from the bank. That makes a very good record for you at the end of the year or the month, because I encourage monthly reports to make you to know how far your business. And don't do what we call overtrading. In few seconds, overtrading is a situation that you do not know that you are selling and trading beyond your capacity. People that are buying from you you are giving them credit, and you are making more. So your business is expanding. But if it happens, you cannot collect those money back. You will not be able to pay your suppliers. And then you have cash flow problem. So we're back to cash flow again. So I advise, plan your records well, get your software, and you'll be good and home and dry.
In summary, for people who cannot get the software, in summary, can you just talk us through, very layman term, the headings or subheadings, or just the process of how we can set up our accounting?
Okay. The first thing that get somebody that is knowledgeable in accounting. Because if you try to do it on your own, it's not going to be easy. It's not feasible. And I start talking about the jack on debtors, the payable, receivable, the fixed asset, which we call PPE now. There's a new accounting format, IFRS, which is in form now. If you are not an accountant, you can't. You cannot. And Inland doesn't even receive any account that is not in that format. Get an accountant or consultant. You can get it done for you, and then you follow through. If depends, I know BOI has some consultant for those they give loan to that guides them in some of these issues of accounting.
For people who don't have that, for people, are you saying that every business must have an accountant?
There are ways. You may not employ an accountant. You may have a consultant that will make up your books. You may come in month-end to keep your books.
Okay.
But you need to have what we call vouchers. Every payment, there must be voucher. Even when MD collect money, there must be voucher. If MD doesn't sign voucher, the cashier will make away with the money. Because you say the MD also doesn't collect. So MD will not even know how much he has collected. he collected 50,000. You say, oh, God, you collected 150 last month now. So you have voucher for everything. So, and then you have invoices for your sales. And for the people you sell on credit or cash, you have cash invoices, credit invoices. So somebody that is versed in accounting can come at the end of the month cheaper. You just make it for you, and then off you go. But like I said, there are very cheap software that you can use.
What's the advantage of keeping good accounting? What's the advantage?
Makes your record straight, makes you transparent, makes the Inland Revenue to be able to check you out. Because if Inland Revenue doesn't believe in your record, they give you what we call BOJ, best of judgment. If you are supposed to pay 50,000, and you say you come and pay 250, it is not left to you to come and tell them, sorry, it should be 50,000, it should be 30,000. And you cannot do that except you have records. You have evidences of those transactions. So you need to keep your record in order to be transparent, in order to fulfill the requirements, in order to know how far your business has gone, and so that you don't even overtrade, like I said.
Thank you very much.
And if you overtrade, the next thing is bankruptcy. Like I said, 50% within 5 years, they die.
Thank you very much, Reverend Kwejo.
Thank you.
I appreciate you coming here to empower us with information. Thank you so very much.
You.
We look forward to having you one more time to respond to fallouts from this topic. Don't go anywhere. We'll be right back. The knowledge you have gained today on keeping your books, it's immense. Everybody wants to build a business to last. And on the UD Factor, we empower you with information on all issues. So go out there, get the software, and keep your accounts to enable you build your business to last. For many years, in countries abroad, you have businesses that have outlived the founders. How many businesses do we have in Nigeria that have outlived the founders? With proper accounting, good bookkeeping, I believe your business will outlive you, outlive your children and your children's children. Until I come your way another time, my name is Yudi. Goodbye, and God bless.